This session is brought to you by Zurich Life and Investments. These guys are one of the last true independent life insurers going around, and they're Swiss, so you know their stuff is solid. These guys really understand and believe in the value of advice, which is why they invest in programs like this one and partner with groups like XY Advisor to help drive the positive evolution of financial advice in Australia. Their team are just really good people as well. So if you haven't already connected with them, to learn more, check out their website or speak to your business development contact. This session is also brought to you by Sun Super. They're one of the fastest growing profit for members or industry funds in Australia. They were the very first of these funds to partner with advisors, and they've got functionality where you can actually link to your client's Sun Super accounts and charge advice fees through the fund, as well as a number of tech innovations to make it easier for you to work with your clients. They've got great investments, they're really, really cheap, and their team are just generally legends. So if you haven't already connected with Sun Super, give them a shout because they're doing some really cool stuff.
Welcome to Paul Mann. How are you, mate?
Yeah, not bad, mate. How are you, mate?
So we hear that you're managing the Future Fund. Tell us about that.
Yes. Same name, different person.
Right.
Easy mistake.
Right.
I am good with money, but maybe no one's given me quite that much.
Yeah.
The funds under management aren't quite there yet.
Well, you have recently started a business though, right?
Brand new.
Yep.
Brand new. Yeah, I started it. We only got authorised in November, so 2017. So a few months in.
Yeah.
It's been an exciting ride. At the stage of my life where it was time to do it or not, make a decision to take that step to run my own business. I've run businesses for a long time. I've been an advisor, a licensed advisor for 18 years now. So I've seen... Yeah, I've seen a lot of change and a lot of things come and go, but I felt like it was the right environment, scarily enough, to start a business.
May I ask, I'm kind of interested, 18 years ago, what was the industry like? I mean, obviously we hear
Can you remember much of it?
So I can remember
the
it.
first-class train rides through like the Colorado Rockies from...
well, I think that's the
Australian
perception,
Prudential
but I mean, I imagine it's
pretty
kind
sure
of...
that happened. Yeah,
Look, I can tell you that. And look, I suppose a bit of background on myself. I was in financial markets, so my first job was a chalkie on the stock exchange. So,
Wow.
Yeah, I was very young. So back then, open outcry, and I loved the adrenaline of it. I loved the pace, and it really taught me about financial markets from the ground up. Like when you get that grounding in it, you understand risk, you understand movements, things like that. So I did that for a little while and then moved into futures trading. So I was on the open outcry futures floor for 10 years in Sydney and in London, working for companies like ABN AMRO and Bankers Trust. But the environment, and this is about, I suppose, being relevant and also checking in with yourself and making sure you're doing what you're comfortable with. The trading floor, the open outcry systems closed down and they all went onto screens. Now, I was an excellent floor trader. I'll give myself a rap here, but I ran big books for big companies and did it well. But as a screen trader, staring at numbers moving all day without the noise and the emotion, I found myself, I was a dinosaur at 30 years of age.
Whoa.
And I was very successful at this, and I went, okay, what do I do now? I tried it on a desk. I tried trading for myself for a while. So I was what was called a local back then. So I was trading my own money. I found that very unfulfilling, making money for the sake of making money, not adding anything back into the system or into the community. And I had
when you were doing it for yourself,
Yeah, I'm
did you
keen to
have your
learn
own
about
chalk
this.
board?
Yeah,
where you,
how does that work?
Just for
How does
No,
that
I
work,
was trading for myself. So I was, I had some capital, and I had an account with a brokerage, I suppose you'd call it. It was actually, a licensed futures trader, and I was trading interest rates. So I was trading predominantly 3-year and 10-year interest rate.
So at the end of the
futures.
day, you've got a stack of receipts and you give that to the...
No, it was all online.
No, beforehand when you were...
beforehand,
when
when I
doing
was
the hand things and...
Yeah, okay, yeah, that was very different. So the open outcry, it's like a big auction.
Okay.
Okay, so that's what it is, and
Just multiple things getting sold everywhere.
yeah, well, you're in a pit. In those pits used to be, so there was a 10-year pit, but they had different months. So the months to expiry for the different. So a lot of it was about shouting, but there was also a lot of hand signals. So you would, buy and sell. And
did you use your sort of presence from karate?
I didn't do karate then, but you did. Look, it took a long time to train up and to build presence and to build a reputation as well.
Right.
Nice.
And you had to think very, very quickly. It was all about quick thinking. And yeah, you're right. So what you'd do is buy and sell. You'd write it down as you go, and there would be the seller had to write out a sales sheet. So the seller would sell it and would give it to the buyer, and that's the way it worked.
Right.
So there'd be one copy for you, one copy for them, and one copy for the exchange. And any trade had to be announced to the pit. There was a pit boss in there who registered the trade, so people sort of knew where it was. So it was organised chaos.
Yeah.
It was very organised, very, very strict rules that everyone... So to become a white badge trader you had to go through exams, you had to be, be trained up. You were a red badge first, weren't allowed in the pit. A yellow badge was a trainee, usually a backup. So it wasn't just me in the pit, it was myself and my backup who was taking the orders and feeding the information back and forth.
Who would perhaps have a relationship with like a portfolio manager or a hedge fund?
So there was brokers. So it was a brokerage firm, and so the brokers were on the phones on the trading floor, and they'd be talking to all manner of clients who were using. Predominantly, look, there was you were either hedging your bond book or you were taking positions and having a punt, I suppose, So and there was different types of people and different firms attacked.
That would have been heaps of fun.
Oh yeah.
Look, I was 20 years of age. That was in my 20s. I was overpaid and had a ball. It was a big boys' club. It was.
This was the 90s?
This was the 90s.
Yeah.
So from 99 to 2000, that's what I did. Spent 3 years doing it in London as well with Bankers Trust. I moved over there, and that was 5 times the size, and it was huge. And that was quite scary when I went over there. But I wanted to go travelling, but instead of just packing up and backpacking, I thought, well, I'll do it properly, and lived in London and worked and.
So good.
But it gave me such a good grounding in markets and things like that.
So now that when clients come in, you yell at them and throw bits of paper at the door.
I'll tell you what, I really had to, and you laugh. I was very, people on the trading floor, all the people that knew me, I thought I was very aggressive, right? And me, I'm not an aggressive person, but you had to be.
Assertive.
You had to be. You had to be aggressive, to be honest, because if you got left out of a trade, you had to fight for that trade, because if you missed your price, then that's a reputation of you as a trader, because if you couldn't fulfill what you were there for, well, you're out. It was cutthroat.
Yeah. And
that's what the broker, they want to get the best prices. So, and a lot of the time you would fill an order and just go, yeah, you're done, and then work on it to get a better fill, so you could come back to you and go, yeah, I've got some better prices for you. And that was an intimate knowledge of the market and the movements and knowing what was going on. And it was like reading a crowd, taking the temperature of the crowd, what was going on, knowing where other people's positions were, knowing that there might have been a local or an independent trader there who was well out of their depth and had to get out, and you were there going, okay, well, they need to sell at some stage, or it's going down. Where's their stop loss going to be? And picking up a bargain and
nice.
Or also stuffing it up totally, which, trust me, happened often, and going, how am I going to dig myself out of this?
Ooh.
And face that many a time, and that's when you really find yourself.
It's really interesting because now if you buy or sell stock, you see the depth of the market, but you can't see the fifth sell order. That's a sweating portfolio manager that will take any price, and it's just
exactly right.
But, if you're there and you can see him.
Well, it's quite apt. You look at the fear in the market the last couple of days, and the volatility coming back into the market, and that's it's not based on facts and figures. It's based on emotion.
Are we talking about the crypto market?
No.
Sorry.
Please don't. Let's talk about real markets.
Did you know there's a VIX ETF, which is the volatility index, that broke as a result of the...
I did, so I looked at this, right, and it wasn't that high. It reached, I don't know if you follow much, but it only reached about 30. I don't know how it broke at 30.
Because it calibrate, because there's been no volatility, it's just been consistent. So it's calibrated itself to a really base level. So once it because that it turned like that. So
Right.
Yeah.
and people build these systems, but they don't actually go back far enough and stress test them. They just think this is what it's going to be like.
Because 2008, it was about 100 and something. Right?
Yeah,
I think
but-
the VIX came in after that.
No, it didn't.
Oh,
I was watching
right.
it every day
Oh,
as it was happening.
okay.
I was like, holy shit.
Maybe this VIX ETF though.
Yeah, but 2008 compared to the other day, it was the biggest drop in the Dow in history. So
Yeah.
and that's where it is. It's relative, but it's also record highs. So coming
Totally.
off level
Yeah.
highs to a different level.
Yeah.
Just that's where it comes from, and it's all relative.
Yeah. Bitcoin went down a lot. Yeah.
What is Bitcoin?
No.
So Paul,
I know.
Paul, tell us about this business.
Oh, okay. Well, I was telling a story, wasn't I? I started getting
right.
long-winded.
Okay.
Yeah.
It's
Well,
only
no, you
me.
tell us where it came from.
Yeah, so
Fascinating.
I found myself a dinosaur at 30 and went, well, I need to do something different. I need to reinvent myself, and what am I going to do? Which was challenging. And I had a cousin who was a financial advisor. He's still a financial advisor with in the CBA network, and he always said to me, Paul, you'd be good at this. Paul, you'd be good at this. So I started doing a few of the old DFPs back in the day, they were called, number 1 and 2, and just started studying and went, okay. And so I got myself a job as a branch financial advisor at a banking institution, which I will remain nameless, and earning probably a quarter of what I used to earn.
Ooh.
So that's a big step. So I actually reinvented myself down to the base level, took a base entry level job as a financial advisor. And you talk about what was it like back then. So this was 2000. I was in one branch in the city, and I had one investment book, or investment products. So there was a income fund, an income growth fund, an Australian equities fund, and a international equities fund. That's all I had. And life TPD and an IP policy in another book. There was no SOAs. There was nothing like that. I had a limit. I could only invest up to 200,000, or actually 100,000. I think it was at the start for people. And it was really about talking to people about, well, do you really need that term deposit? Maybe we should be putting you into a managed fund. 3% entry fee, 3% ongoing.
Oh, ongoing.
3% entry fee, 3% ongoing. That was the fees. But that was normal back then. That's what it was.
That is so heavy.
It's just rude.
Outrageous.
But that's what it was. And it was challenging from a values and point of view because, the sales culture was there. It was a sales culture.
Yeah.
And there was, these... hit list of people selling the most and how are they doing that and all this sort of stuff. And I didn't get into financial advice to make money. I got into to do something for the long term. I wanted to help people, and I know this is a very cliched piece, but that's why I got into it. I wanted to use my skills and to build myself a career where I could make a difference with the knowledge that I had. I always think if you find the right industry and you do well at it, you will be remunerated appropriately.
Totally.
That's the way it works. You just got to be good at it. So what it did teach me was how to sit down and talk to people.
Without yelling at them.
As I said, I had to really change myself. I was this angry, sort of, aggressive futures trader. I had to turn myself into talking to
Mum and dad.
mums and dads, older people, everyone, and just be able to get them to open up and talk to me about their lives and what
How
they wanted
did
to
you
achieve.
stop yourself having a really strong view about what the portfolio managers were doing in the managed funds? So I imagine that would be tricky, right? You're like, oh.
Yeah, look, I still got that. I still got views. I
Yeah.
met a couple of asset managers yesterday, and I've got my certain views, and it's built from 25 years of industry knowledge. And I actually enjoy, and I spoke to a relationship manager or whatever they're called these days, and said, look, I'll never invest money in a fund unless I actually meet the fund manager. I need to see how they tick and what they
Wow.
do. So I will never do that. And every in fund I've invested in for people, I've met the manager and spoken to them.
Wow.
So you can't get that out of yourself. I have got a view, and I use it. But what I do is also when we're talking to people about their money, we're talking about long term. And if I've got a day-to-day view on it, it's going to cloud what I'm trying to do for a client, which is not. Look, let's be honest. Whether you're trying to add alpha, gain alpha or really, it's not. You're just getting people into an asset class that'll have growth.
Sure. So as an advisor, rather than talking about the day trading aspect, it's more an asset allocation conversation.
Absolutely. I would rather sit and, Clayton knows this, I would rather sit there and talk to someone about solving their cash flow. That's the day-to-day. That's how they work. That's the biggest challenge in people's lives, not whether the market's going up or down. You pay professionals to do that. You make sure they're good at it.
3%.
Well, look, that's my dark past, and you asked the question.
I don't think it's your past.
Oh, look, that's the industry's past,
correct.
and then that's some of the challenges.
In 20 years, people will be going, how the hell did you sell 0.5 MERs on ETFs?
Yeah, probably, yeah.
How did you charge ongoing fees?
Yeah.
That's going to be the next one. I'm getting off that high horse, but it's about talking and caring for your client now. That's how I see it. It's not about me trying to pick the market because I can't. I always the person who trained me up to be a futures trader, he used to talk about the comet and try. The best thing you can ever be in a market is on the tail of the comet. You can never capture the comet. You get that view,
momentum.
So if you can catch the tail, which regularly is really hard to do. If you can get a ride on the tail for a little while, you'll make money.
Definitely.
But you can never capture the comet. You've got to just get on that
Totally.
tail.
Yeah. That's
And
really
too many
good point.
people, it's gone, and they're like, that comet's gone, And that's the... Exactly. If you can jump on the tail, but now... Too many people got in too late, but now that just happens over and over anyway in history.
So as a ex-futures trader then, what does looking after your client mean if the investment piece is outsourced to an investment manager and then you're the advisor there with that skill set but looking to offer something different? Yeah,
absolutely. So for me, so I worked for banks for about 4 years, and then I stumbled across this company called MoneyWise Global, which was owned by Flight Centre, a very forward-thinking company, and they actually provided financial advice to their staff for free, in-house, as a staff benefit. So I joined that thinking this is why I got into financial advice. It was about delivering on a staff benefit, but meeting the needs of the person in front of you at the time without having any bias towards, well, I've got to sell something to hit a target, I've got to get fund, I've got to get insurance commission, those sorts of things. This was about providing a service to that person in front of you, and meeting them where they're at. And that's a big thing, meeting the person where they're at, not trying to force your opinion on them. So that really formed, that really crystallised why I got into financial advice. And I was able to deliver a service to these people. And, Flight Centre doesn't have an old, like they're 28 and female. That's the basic demographics of the company.
Tough gig.
And look, it was a great, it was a great job for a very long time. And I started as in New South Wales, just running the state by myself. Ended up, growing it, and there was 8 people in the whole business, and ended up running it, and we built it into 65 people around the world, and
around the world.
Yeah.
Wow.
So New Zealand, Canada, US.
Is there Flight
UK.
Centre over there?
Oh, Flight Centre's everywhere.
Yeah,
Great conferences.
Yes,
really? Oh, mate.
I can tell you
carnival.
some stories, but not in this forum. So in terms of my beliefs, in terms of financial advice and what I deliver and what myself and my business partner are now delivering, it is about meeting the person where they're at with no agendas and no formula, if that makes sense. I haven't got a system where you come in and I'll put you through the system. What we do is sit there and go, well, what do you want to do? You know, and discover goals for people. And I know, again, this is cliched, but getting that from people is the hardest thing.
Yeah.
What do you want to achieve? You know, and even highlighting the fact that a lot of the stress they face in their life is financially founded.
Yep.
You know, I've seen marriages break up. I've seen and people have no idea how that happened. And you say to them, well, what did you used to argue about? And they go, oh, well, she spent too much and he did this and he was gambling or whatever it was. But it was financially based. So if you can build a system for people and a structure for people that works for them, takes the stress out of them, get them talking about their money.
Yep. Remove the taboo.
Absolutely. Open it up, make it into a normal conversation, challenge them to change what they're currently doing because it'll be better, put a structure in place that suits them and works for them, the rest will come. And then you can start investing their money in the right asset classes and all that. But if you solve that piece for them, and I've done this with people who, you know, who are 20 and have no money, but I've also done it with people who are in their 50s who have assets everywhere and they still are arguing about the exact same thing and stressing about this, that day-to-day life. And those skills that no one teaches us.
So you're kind of touching on something that's really strong in my heart when it comes to, so it's a psychology or a, you know, that's the value proposition. Yeah,
the psychology of money. I mean, look, it's really becoming a thing, obviously. I mean, we've been doing this for a long time. For me, the central part of it is awareness. If you make people aware that they've got an issue and that there's a way to solve it, then all of a sudden you're opening a door that they've never been through, and you become that trusted person in their life that they will, you know, come back to again and again to look after them. Even once you've solved all their problems and put them on the road, you're that, and I equate this, you're that trusted teacher. Now, obviously you guys all went to school. I would challenge people, think of a teacher, think of how many teachers you had during your schooling period. There's probably one or two that you clicked with. That was it. And I'm not disparaging teachers. My fiance's a teacher. She's a great teacher, but that one teacher did something that connected with you.
Yeah.
And I would say that 20 years later, you'd go back, and if they said, go and do that, you would do it because you trust them intimately. That's what you become. You become that trusted teacher, that person who's taken them from darkness to light, holding their hand properly. And all of a sudden, you don't have to worry about convincing them about investment markets and things like that. All you have to do is take them further on that journey and open their mind to further parts. So the thing there, though, is with great responsibility, you know, with that trust comes great responsibility. So you have to deliver on it, and you have to be true to your word, and you have to have, you know, extremely high morals and deliver over the years. And that's about building a reputation and a career. And a business, you know, and that's what I did at MoneyWise, and I suppose I've moved into and just started my own business. It's actually half mine. My 2IC from MoneyWise has come with me, Kath Navarro, and so we've worked together for 11 years, and we just decided to do it ourselves.
And so, what was the process, Paul? And you decided, you come up with the idea. What happened after that? What was the steps in the planning process?
Look, so I left Flight Centre end of May 17, so almost a year ago.
Wow.
A lot of changes there, and it was time for me to go. And
because you were there for 18 years.
No, I was there for 13 years.
13 years, sorry.
13 years. And I took a break, to be honest, Ben. I needed to let a lot of things go. I was running a really big business, and there was a lot of staff, and there was a lot of stress. And again, like I suppose I found myself after futures trading, I found myself in the same predicament. You know, I had a lot of emotion. I was living on you know, cortisol and those types of things. It was a very, very, very high paced role. So I had to rediscover myself, and I suppose Kath found the same herself in the same situation. So I took some time out just to reassess what I really wanted to do in this industry. I knew I wanted to be in financial services. I love this industry. It's got its challenges, but at the heart of it, it does good work for a lot of people.
Yeah.
So I had to discover what I wanted to do. I looked around. I know a lot of people. I talked to a lot of people. Was offered a few different roles in different corporates, but I just didn't. I didn't want to fight with everyone all the time, and that's what I was finding. That's a knowing laugh. I was fighting every day, and all I could see myself in these other institutions. I hate bureaucracy, and I will fight against as much as possible.
Yeah.
And so I just thought, you know what? So to be honest, Kath and I had a coffee. We sat down and we talked about it over the years. You know, you do when you work closely with someone, you go, well, we could do this for ourselves, and that was probably always our backup plan for 10 years.
Yeah.
So it was as simple as and me saying, well, okay, well, what does it look like? We sat in my dining room, got a whiteboard together, and just started putting it out there. And we'd worked on a business. We built a business over the last 10 years, so we know the steps to do it, you know. And it's about having purpose. And if you go to our website, you know, our purpose is there and our beliefs. We sat down and said, what do we believe in? What do we want to do? What does it look like? So we've got a purpose there, and we've got a set. I think there's about 8, maybe 10 beliefs and what we believe in. And that's the basis of the business. It's almost like our Magna Carta or our Constitution. So the decisions we make about the business and how we want to act and how we want to grow have to be okay by the beliefs. And if they're not, then are we compromising our beliefs, or have we got the beliefs wrong? Do we need to revisit those? Now, I've revisited those for the last 8 months, and we haven't changed a word. So it's about just having that heart, you know. And you can think, you know, how do I say this? There's a balance between your mind and your heart, and it's about really not overthinking things and trying to just be all about your mind. It's about bringing your heart into it. That's the key. You know, if you can balance your heart and mind, then you can really harness a lot of energy because you're in balance. And it's a very much a male thing, having not enough
What
heart.
do you mean?
Yeah,
No.
well, it's true. And I've done a lot of work. I've had, you know, mentors and things over the years, and a lot of them, and I suppose working in a predominantly female company at Flight Centre really encouraged me to open that piece and make sure that I was balanced in that way. Because if you were too blokey, it wasn't going to work.
Yep.
And you end up telling people instead of listening and balancing yourself out. So it's having that heart and mind balance that really, you know, then you know the centre of your business or your true purposes and beliefs are right. So you've got to question that, and it's great having a female, you know, a business partner as well, because you know, the yin and yang and all that sort of stuff just balances out and makes sure, okay. Because I'm not targeting a male audience. I'm targeting a human audience.
Yeah. So how do you want to set up? So you got the heart, you got the beliefs, you got the values in the business. But then from that point, how did you, like, what was the process you went through to decide who you were going to work with and what sort of stuff you were going to do? Yeah.
So that was all part of the initial process. What does this business look like now? And look, I suppose the most important thing, Ben, is where do you get your clients? Yeah, that's the key. Okay, that's whether you align yourself with accountants, whether you're marketing. Well, how you know, where do you get your clients is the heart of that question. So we were in the corporate, what used to be, I suppose, or what used to be defined as the corporate super space. Okay, that's what MoneyWise predominantly did. It worked when you're dealing with 20-somethings. They don't have a lot of money, but they've all got super. So having a great financial conversation with them was, well, let's do a budget and let's organise your super. And the amount of, you know, future value that business has added to the staff of Flight Centre over the next 40 years will be phenomenal, just by putting them into the right asset class and opening that up. So we did that really well. So obviously, Kath and I when we've started this business, we've gone, well, that's the space we want to be in. But I don't actually define it as corporate super. Those days are old. For me, it's about corporate financial wellness, for lack of a better label, and wrapped up as a staff benefit.
Yeah, which is huge, right? Because I think businesses, corporates especially, are getting better at understanding that to simply pay your staff more doesn't necessarily fix anything or create intrinsic motivations. Often, if people aren't looking after their finances and aren't aligned to what they're doing, it can actually be a bit of fuel to fire.
Oh, massively, and the lack of the lack of financial literacy in modern day society is quite scary, and we all know that. The manifestation of it is obviously stress and adverse behaviour that isn't just at home. The amount of people who sit at work worrying about the bills they've got to pay and the very basics is phenomenal, and the loss of productivity to companies based on that.
It's huge.
Absolutely. And look, companies offer, counselling services and gyms, and they really focus on the physical health of people. They're much more getting into the mental health of people. But the challenge there is a lot of those manifestations are caused by financial stress.
Definitely.
Especially, under 45, you'll find 50% of the stress that's caused in people is financially based.
That's really interesting. So if we've got a problem where mental health is blowing out of proportion and a massive segment of that is financial, then it's kind of
the amount of clients
the way you put it.
The amount of clients I've dealt with over the last how many years that all of a sudden their whole life changes just because we structure their budget correctly.
It's huge.
Very, very simple process. It has far-reaching, and it's beyond. The thing you're also building there is future generations of financial literacy. Because, in my experience, if your parents were good at it, you are.
Yep.
But so all of a sudden, if you instill that into them, get them working, their children, generations will be improved.
I find because obviously this is our world, and you try to come up with ways, frameworks to make things easy for people to understand. And I think people are overly engaged or overly emotionally attached to their cash flow, and under-engaged and under-emotionally attached with super. And I think the reason is
Absolutely.
I think the reason is because there's no separation, there's no layers between you and your cash flow, but there's a bunch of layers between you and your super. So I feel that the best way to fix a budget is to add in layers, invented or not, but if you can disconnect someone from their salary, you're going to get a better response. And then if you can reduce and engage people in their money for the long term, then you get better results. And it's so weird because they're so opposite. One's overly emotional and the other one's under emotional. And then as an advisor, we can sort of level that out to get better results on both playing fields.
Someone yesterday referred to super money as monopoly money.
Yeah, what the fuck is that?
Yeah,
I've always said to people, it's your money, you just can't spend it for a while.
Yeah,
So
there's a
you've
lot
got to
you can
take
do with it. It's just one thing you can't do with it, is spend it.
And I think the way I've always explained that is having, time, and this is, something I learned back in the old days, is about talking about timeframes and the appropriateness of different investments for timeframes. I used to do and still do, if I need to really educate someone, I'll run them through a scenario over time of investing in bonds or term deposits especially versus the share market, and just what if you'd put this much money in that for 10 years, and it's really you need to learn this, but there's some really easy scenarios, and if you know some good share stories, i.e. Flight Centre or CBA, there's a lot of great share stories where you say, well, if you'd invested in the term deposit or you'd bought some shares at that time, what would have happened? And knowing the dividends and the growth and all the bits and pieces, and saying, well, where would you put your money?
Oh, totally.
And short term, you're better off in a term deposit.
Yep.
Without the risk, and the return wasn't there. The return was guaranteed there, but over time. So it's about, super is just about taking the super label off it and just saying, this is money, but this is long-term money.
Yeah.
This is what we do with long-term money. This is what we do with short-term money.
Yep.
And the problem, and to your point about people disengage with their super, the problem is that they're conditioned to do that because every marketing agency in Australia that runs a super program isn't about opening that up and teaching people about it. It's actually saying it is that it's marketing barriers, putting people in the way to say, don't touch it.
Correct. It's to overcomplicate it. One of the best posts I've seen recently on the XY Advisor Facebook group was Peter. She said she was talking with a client, and the client contacted her existing super fund. And the super fund, I don't know if anyone saw this post, but the super fund sent out a bunch of collateral, we'll call it. And there was about 20 different pamphlets and whatnot, and it was things like tax changes to your superannuation from 1st of September 2016 to the 1st of, it was
They do it on purpose.
Insanity.
You try and read a super statement that you get from
It tells
many
you
of them.
nothing you want to know.
What confuses the hell out of you. And
It's almost
there's no
like
consistency.
you need a solution for super that helps people to engage with them. There's a market.
I'm
I feel
sure-
like
I'm sure.
someone's got to be thinking
So,
about it.
someone
What a great
definitely
idea.
sprouting an idea as we speak.
Yes. Where'd you get that idea from? By the way? Anyway.
Well, funnily enough, jokes aside, engagement is the realm of financial advisors. I feel like that's what we do. And I met Paul through the AFA mentoring campaign a few years ago, and that's all we basically spoke about for a long time, which was how to engage, or how to get people to care. Because if
Also,
you get people
how to get you to focus, Clayton. That was the other thing.
Well, that's, I don't know.
Yeah.
I thought that was a plug for the AFA's mentoring program. But if your job was teaching Clay how to focus, clearly it's a huge failure.
I was the AFA mentor for Clayton and ended up getting him to sell his practice and move on. So, maybe not a great success.
one time we were having
What are you doing? Why are you an advisor?
Yeah, he goes, are you an advisor or are you an entrepreneur? And I was like, ugh.
And be true to yourself, which is great. But
Yeah.
you talk about engagement, you talk about those things, and super, and we can blame the marketers, we can blame industry funds and all these things. A lot of the blame needs to be on advisors as well. 'cause
Totally.
We've been conditioned in certain areas to move people from that fund to that fund, not because it makes sense, because it's a fee driver for the various layers. So, we really need to be careful about who we blame as an industry. I think we need to own that and solve it more as well.
Yeah, taking responsibility is key.
And I always see myself as I need to do my bit. I can't do it for you, Ben. I can't do it for everyone. I'm going to take my stand and I'm going to do my bit for my industry. Which
is awesome, right? And heaps of people are doing it these days.
Absolutely.
Yeah.
Look, and that's where you see that there's still some anachronisms,
Sure.
some old style things out there, but. I think advice is at a crossroads right now, and the next 5 years is going to be really, really challenging for a lot of people. But I also think it's going to result in the industry that should be there, as opposed to the corporate driven one that we came from. I suppose.
I think people are going to be forced to, with all these changes, to either step up or step out, and I think that's a great thing for.
Well, you
for
see
the
this
industry.
with companies divesting their wealth divisions and things like that. They they don't do that lightly. They're big transactions from those companies. So things are going to change. My personal view is that it will be the age of the IFA. Whether you're aligned or not, look, that's a thing. I think that's a personal decision. You pick a dealer group that allows you to be product agnostic, and that's one of our beliefs at True Direction. We are product agnostic. I'm not there to sell someone's product. Yeah. I'm there to provide a financial service. That's why it's called financial services, service to people.
And how do you? So you're doing like corporate financial wellness in the workplace and helping people with cash flow and those sorts of things. How do you do the engagement side? So obviously you're working with the business to do the super fund, but what happens post that point, and how do you balance the spread between your cash flow and your doing the super like managing the super product?
Yeah, so big questions, especially for a brand new business.
Come on.
Yeah, to be honest, Ben, we're still working on that, to be honest. And engagement, engagement is a big word. When companies measure engagement, all that. I think engagement is the outcome of a culture. So it's about creating a culture. So if you are in a company, so if a company A is my corporate client, I need to enhance their culture. So I need to understand their culture. I need to be part of it. I need to get to the heart of what it means to work at that company and why the people want to be there. And then I need to use that to feed off that, grow that, and enhance that. Otherwise, I'm just going to be I'm going to be an outsider coming in and just saying, hey, do that. And they're going to go, who the hell are you? So for me, engagement is a result of culture. So if you can understand the culture, it's almost like the old iceberg. Engagement is what you see on the top, and that's what companies measure when they do engagement surveys in their companies. The culture is the real meat of it underneath, and that's what drives it. So in terms of how I've always worked, it's get in there.
And get in there is get in with a corporate HR department and have yourself as a staff benefit.
I call about on-site and in-site. So you need to be there.
Yeah.
You can't just say there's an app and let me know when you've come through it. People won't take that step. You need to have a face.
Yeah.
In a corporate sense, it's a different type of approach. We need to be in there and it's top down, bottom up. You meet all the new people coming through. You make sure the leadership's engaged, HR people, payroll, understand what you do, and then run workshops, programs, stalls, emails, podcasts, webinars, until something works. Because everyone's going to do things differently.
Do you have a view then on, because I think it sounds really, really wonderful, especially for larger businesses, because you've got the capacity to deal with many people, so there's certainly scale there. Do you have a view then on how big a business needs to be before the likes of yourself makes commercial sense for the business? Thinking of, the businesses out there with 20, 30 people.
Absolutely. And that's probably, for my business, that's going to probably be a challenge, looking after that many people and being paid for it, because it's probably not going to work, especially corporate super and how you're rewarded through a corporate super plan has changed massively. And, most advisors who are in that space have left.
Yep.
And it's not, some of it's being taken up by some of the, so I'm on the committee of the WSSA, the WSSA, Workplace Super Specialists Australia. So it's a small group, but it's a big group in terms of what it represents in corporate super. It's been around for about 6 or 7 years now, and to be a member of that, you have to be a corporate super specialist, and there's rules and regulations about being in there. So, and they're people who are committed to taking that space forward. In terms of the size and all those sorts of things, it depends on your business. A lot of the corporate super specialists, they will have, they've already got the scale and they will look after that.
Absolutely.
I've always been of the size where I need a company where, at least 1,000 staff to make a difference. Because then you've got the scale of or not the scale, but the difference in demographics through the company, so you can deliver different services and be able to really pinpoint on the problem areas for the company in terms of that financial stress, productivity. Because at the end of the day, the company's going to pay you to look after their staff to improve retention, attraction, and productivity. That's what they want. That's the service. They want
An outcome.
more margin, right?
Yeah.
So a workforce that's more focused and more margin.
Well, healthy employees and healthy culture.
Well, a balanced person who feels respected and cared for within that company
it's better on every measure.
It is.
Yeah.
It is, but it's a challenge for companies to do it because it's a cost.
Sure.
You used to be able to just get paid out of the super fund, and it was tickety boo. You can't do that these days. So you've got to really talk to the employer and make sure they see you as a service, not as an addition to the super fund. For me, the super fund becomes a hygiene factor within the service. It's what we do because we can add value in that space, but it's not why you're there, which is where it sort of started from. It needs to to grow from there. And you add other services to improve your margin as a business owner. Home loans. I mean, at MoneyWise, we started as advisors, but we added in a home loan business, which was very successful, a tax business. We were doing tax returns, simple tax returns, but that added a lot to the margin that we'd lost from the super fund. I see for me, the opportunity is about getting a client base and talking to those people, and some of them will move into True Direction's private client space and become
Sure. And True Direction is the name of your business.
True Direction Financial is the name of the business, and we do that, and some people will want to use will want to
at
use
that
us.
level. But most importantly, you're capturing the bottom 80% who perhaps wouldn't have capacity.
Right.
Because it's not appropriate for them to pay $5,000 for an SOA because you're...
And it's not about an SOA. It's actually about
literacy.
Half the time, cash flow, and a bit of work on their super. I mean, there is an SOA with super, obviously, but it becomes a pretty tight document.
Yeah.
And we're not there trying to put a 20-year-old on a future plan.
Sure.
It's about, look, let's do what we can for you now, get you focused, get you going, and then build your wealth and be there as we go on.
Yeah.
But more as a staff benefit, if that makes sense.
Yeah, you've kind of touched on something that I kind of think about is the eroding relevance of an AFSL. And I think you've kind of touched on a lot of those things where if you're talking to people about cash flow and, high level financial literacy, there still needs to be the AFSL because there's an SOA that sits at the back of the corporate super product.
Absolutely.
But it's the last 5%. It's not the 100%.
Yeah, look, at MoneyWise, again, we brought in money coaches quite a few years ago, mainly because they were having low-level conversations, and we probably, and advisors are very hard to get, good advisors are hard to find and expensive. So it was a great way to engage people, have fun coaches who were getting people excited about their finances and then moving them through the layers. But you still need advisors there. I think I've seen businesses who go and do that corporate wellness, but if they don't have an advice, people go, well, where do I go? Because you've got them excited about something, but they don't know where to go. And so you need to have advice to take people on that journey. You can't just sort of educate them to a level and then go, you're on your own now. Cause
people aren't good if they're not accountable, right? So you need to kind of...
So it's about having layers to your business and knowing, for me, it's a tailored approach to each corporate as well. I'm not going to go in and say, here's the True Direction model, chuck it in there. It's tailored because, again, the engagement is a result of the culture, so you need to be part of the culture. So it's a tailored approach. Go in with a diagnostic, understand where the stress points are, and then some might need workshops. Some might, a company might all be in Sydney here, or they might be all around Australia. So there's going to be different.
And where are you having conversations with the CEO, with the MDs, or are you focusing?
Anyone I can at this stage.
No. Back in the day when you would go into a business.
Clay's just asking because he's really recently given himself the title CEO, you see. It could be the Sprout Super corporate wellness thing for you and Vera.
Well, we have been talking. Look, for me, it usually it can come through the CFO. It can come from at the top. HR generally is the place that you will gravitate to in these conversations because that's what they own.
Do they care?
Look, they care about their people. HR managers and HR. Look, it's a tough job, HR. It's a really tough job. Being a HR manager, it's not just about the feel-good stuff. I mean, a lot of it's trying to deal with the current IR laws and dealing with people who are doing the wrong thing in your company. And you have enough of a company, if you have 50% of your company all working in the same direction, you're pretty lucky in a large company. Generally, I find 50% are doing that. That's a good company. 25% are sort of there, and there's 25% who are off the reservation, right? And that's a normal. So HR are trying to deal with this. They're trying to, how do I say it? They're trying to sack the people who are stealing money from them or doing the wrong thing, right? And I'm generalising there a lot.
Yeah.
But that's a HR manager's job, managing risk. So it's tough. And they've also got super in their purview. They've got payroll. They've got recruitment. There's so many pieces.
Also, the stuff about being an employer of choice and all that sort of stuff.
And the challenges. The pressure on a HR manager is massive. So if you can come in and take the super off them, work with their payroll people directly. What about when workplace injuries and things like that? So if you have a good super, corporate super, you've got the insurance attached, right?
Yep.
And, income protection, those sorts of things. A good super offering has a great insurance offering. If you can take that piece off them and move people from, a work cover situation onto their IP and transition them across, be involved from the start with, people who die on the job and things like that. I mean, these are the realities of a large corporate. They have people who die there. They have people who are...
In the office.
Oh, people die every day.
In offices.
Yeah, but even at home, there's still staff, right? There's still people that are under their company. And
could you imagine a HR director dealing with a corpse?
No, I mean,
in an office.
Do you do dead body removal? It's not part of it.
But
Quick, call the super guy.
But the difference between a great company and who cares for their staff and a company that just treats their people as numbers is that sort of care.
Yeah.
And I've worked with companies where if there's something like that happening, they call us.
Wow.
Right, we've got a potential claim, or we've got a situation. We've got one of our staff who's been diagnosed with cancer. So to be that trusted person in their business, where they come to you and you deal with you deal with the family as well, take them through that tough position.
Wow.
These people get $1 million life cover or whatever. What's the family going to do?
I think the direct family care, but in my experience, not with life insurance, but certainly with income protection, and if the HR department's been really good and we've created a narrative that we've told the staff base about, the staff actually just really appreciate the fact that you've looked after their mate. And it's like, shit, I don't know many employers that would do that, and we've facilitated that.
Absolutely.
It creates a beautiful culture.
We've had a client where we actually went to his funeral, and in the eulogy we were thanked, which because we actually sorted him. He had super funds everywhere, and we were able to claim early on all his insurances. He was terminal, and he was able to buy a house for his family, wife and 2 kids. He was able to buy a house. He'd never bought a house. He'd never thought he'd be in that position, and he passed away in absolute the confidence and serenity of the fact that he left his wife and family in a house that was unencumbered, and he was like happiest man, so to speak, in that position. He was at peace. So that's what an advisor does. But in a corporate, that is powerful. The difference between being a provider of a super fund advisor and just going in and saying here's your super and come and meet me in my office if you want some advice, or diving into the culture and enhancing it with your skills and the bit you add. So the HR managers become your go-to, but without a CEO signing off or a CFO. And the CFOs I find are the ones that will say, well, do we really need to spend this?
Could someone start a business just doing that?
Just doing what?
Just being this culture / super sort of specialist for a company, and basically not take on all the administration unless something turned up. So you would go into a company maybe 3 times a year or something, and work on all those things that you spoke about. But a lot of that doesn't have administration on the back of it. Especially if you're not, say if you're not looking to switch super, you're not looking to do all these things that are, say you're just using whatever's in-house, and your job is just the specialist, to be there to educate and engage. And
in
then
a consultant basis.
yeah.
Look, and I
imagine if someone
suppose-
was doing that. You just had, say, 10, 20 companies around
Yeah.
the city charge 50 grand a year.
They exist. They do exist.
They
so,
do
So you
exist.
outsource the payroll function to them, the HR function, the employee benefit function.
No, I'm not even talking about that. So basically, none of the stuff that would take administrative burden, and you just came in 3 times a year and engaged people to reduce the stress, to improve productivity, things like that.
It's a bit that you could, but again, it's one of those. It probably wouldn't have traction over the long term. You've got to be part of it ongoing, and I suppose that's what we do. One of our services is we'll come and do a diagnostic and do a consultancy, and do a survey, measure the stress, compare it against a database we've got, and go from there, and highlight hotspots and highlight what we could do, how that could be solved in different ways. And then the next step would be to engage us or someone to do that.
Right, that makes
So,
sense.
yeah, you could, and I suppose, to be honest, that's probably our prospecting, our piece. That's what we want to do. Talk to companies about their people, and a lot of companies have great financial benefits available already, but they just don't utilise them.
They're so bad at talking to the staff about what they offer.
Yeah, because it's the HR person who's talking about it who's not financially minded. They got into HR not because it's the accounting or the finance arm that knows it and
Yep.
says, "Oh, the
they pay the
supervisors this
bills.
and the fees are all great." But the HR people are people. They just want to help people, but they don't know how to translate that
Yeah.
across. So one of the functions that we've done with companies in the past is be able to maximise what they've got. So share plans are the classic. So large companies will have a great share plan and offer 2 for 1, 3 for 1.
Yeah, crazy.
Absolutely, like money for jam over the long term. One of the best things you could do as an employee is invest in your company's share plan. It's tax effective and it's growth asset. If you mean business and want to be there for a long time, buy into the share plan. But people don't know how to. So one of the things that I did again at Moneywise was so again I draw back to myself being a chalkie on the stock exchange. I just have I just know shares. I just know what they are. It's an innate thing that I've got, but most people don't. So I thought, how can I get people to understand shares? So the ASX runs a share trading game.
Yep.
Have done for 40 years.
Did that in high school in economics.
Right, exactly. Right.
I wasn't
Great
good.
way, and exciting people. But so I went, okay, why don't we run one of those? So we started to try and build one ourselves. I went, no. So I approached the ASX and said, can you white label one up for me? And they went, probably. So anyway, we got them to white label their share trading game. Put that through Flight Centre. We actually had a launch. Graham Turner, Screw Turner, who started Flight Centre, came down to the Sydney and rang the bell, and we had a big. It was fantastic. We had a big launch. We videoed it, put it through the company, and in Australia, where there was probably about 7,000 staff, we had 2,500 travel agents.
Wow.
Playing the share market game, and not just playing, like the engagement levels on opening emails and all those things is 87%.
Wow, that's astronomical.
Absolutely. So it was a combination of a really good idea, well executed, but also a great marketing plan around it. And our marketer there was sensational at that.
Yeah.
And it was great. We had a good prize. It was $10,000 worth of travel was the top prize. We hung that out there, but I didn't. And I approached a few fund managers to try and get them to open up and go, well, can you be part of this? And it was interesting. Some of them went, yeah, great, but we don't really want to be part of it because we don't want to be involved in day trading. I'm like, this isn't day trading. This is not turning people into share traders. What it is demystifying the share market.
Yep.
So it was a 10-week program where you started out going, I have no knowledge of shares. And by the end of it, we built this program where you got exposed to more and more. And then by the end, you knew that share prices went up and down. You knew you got dividends. You knew what it was to be a shareholder. Now, the end result of that is that those 2,500 people, when you go and have a discussion about their super, and about moving from a balanced portfolio when they're 25 to an equities-based portfolio where they should be, you've done all the pre-work.
There's a reference point.
They know. Oh, yeah, shares. Oh, yeah, well, yeah, I played the game and it was fun and I understood it and I get it that it's a real thing. So it's...
What could advisors do for something similar to that? Say if Ben can't get access to the ASX to white label.
Yeah, look, it wasn't cheap, I must say.
Yeah, I could imagine. So, but I obviously like it and the engagement's outrageous. So what do you think an advisor could do to replicate that game?
Well, there was a public game twice a year that the ASX run.
Yeah.
You could get people just doing that if they wanted. It's a hard one because a day-to-day, getting people involved in that, it was tough. That's why I went down all the different routes and that's the one that I finalised. What could an advisor do? It depends on what client, if you're going to run it for your whole client base or are you trying to do it
perspective, like as a marketing campaign
with companies or with individual clients?
To retail.
I think it's a different approach though, Clayton. I think that was more of a corporate engagement approach. Day to day, when you're one-on-one with a client, you've got to sit there and you've got to have your stories. You've got to be able to educate those clients. Depending on where they're at. Again, meeting them where they're at and providing a solution around that. I don't, I've met many a client over the years who said, I want to be a day trader or I want to do these things. I'm going, okay, well, here's some good books, but knock yourself out. I'm not taking you on that journey. You've got to do that
boring as
yourself.
hell.
Well, you've got to do that yourself.
Boring as hell, day trading.
Yeah, it is. But some people want to do that and that's up to them. I'm not going to judge them, but
secretly you're judging them.
No, I'm not. I'm probably thinking no chance, but I'm not judging it. Look, but the thing is, I always say, well, if you're going to do it, you've got to do it properly. And
such a high percentage failure rate.
Oh,
Yeah.
it's like startup companies, It's a great idea, but how do you execute it? So look, I don't think that's a retail approach. And that's where these, you need a certain size and to be able to run something like that just to make it pay.
Yeah, there's a cool game you can get access to, and it's free, and it's stocks that are listed on Wall Street, and it picks a random stock at a random point in time, and it says every time you click the mouse you buy, every time you click the mouse you sell. So you buy, sell, buy, sell, buy, sell, and you don't know when the game's going to finish. And
it follows historical.
And it follows historical data. So if you're a day trader and you're smarter than most people, have a go at this, and then you start with 10 grand. And at the end of it, mate, I go broke after 2 minutes.
Yeah.
Nice.
To be fair, that's a perfect reflection of your life as it is.
It's amazing what happens though, because when you start to see the market drop, you're like, and then you realize that you've got out. It's an awesome tool for people to realize how difficult that stuff is.
Yeah, and look, and it is so difficult. So the failure rate, and that's probably why I know how to trade. I've done it myself. I've done my own, but I don't trade my own money. It's just not worth it because you miss too much. Unless you're watching it all the time, you miss too much.
Totally.
And you can't watch it all the time.
Yeah. All right, mate. Well, is there anything that someone can, if they wanted to, reach out or learn more, or because you're part of One Direction, wasn't it?
No.
Sorry, mate. Sorry. So True Direction.
Yes.
True Direction.
So True Direction of Financial. Look, yeah, it's www.truedirection.com.au. We've got a website there. That's our contact details, myself and Kath, and an outline of what we do. The corporate piece we're building at the moment. So we're only pretty new. We are talking to some companies at the moment, but the piece on the website is more generic at the moment. But that'll come.
Yep.
And again, our approach is going to be tailored to each company. But that's where to find me.
Cool.
TrueDirection.com. And happy to talk to anyone about this type of area of financial advice. Like I said, I've been an advisor for a long time. I've been exposed to a lot of things over the years, and I am a true believer. But I also think we do need to make sure we're pushing forward in our own areas and waving that flag, because there's too much bad news out there about us, and it's not right.
Totally. Thanks, mate.
Thank you.
Pleasure.
Very much.
Thanks,
really
guys.
appreciate it.
Cheers, Paul.
Enjoyed the talk.
Thanks, Paul.
Cheers.